Good day, everyone. So, the chapter 5 is partnership dissolution with liquidation. So, the dissolution of a partnership does not mean the termination of the business activities but rather the continuity of its operation with a change in the ownership structure as caused by the administration of a new partner. Retirement or withdrawal, death, incapacity, or bankruptcy of a partner in incorporation of the partnership. So there are three basic objectives of the partnership during the liquidation process are focused on the following terminal activities. First is the conversion of non-cash assets into cash. The second one is payment of the partnership creditors, and the third one is distribution of cash or unsold non-cash assets to individual partners. And so, of course, there are causes of dissolution with liquidation. First one is the bankruptcy of the firm. The second one is the mutual agreement among partners to close to the business. Now, the third one is the purpose of which it is accomplished already. And the fourth one is the period covered in the partnership contract has been terminated. As you can see below are the definition of terms: the dissolution, the termination, liquidation, the realization, gain on realization, loss on realization, the capital deficiency, deficient partner, solvent partner, insolvent partner, partner's loan, right of offset, theoretical loss. So there are two types of liquidation. The first one is the liquidation by lump sum or total. And the second one is the liquidation by installment or piecemeal. Liquidation by lump sum, the non-cash assets are realized in one setting only. So the payment of partnerships, liabilities, and distribution of cash for settlement of the partner's loan and the capital balances are done only once. So when the partnership is liquidated, the books should be adjusted and all nominal accounts are closed. So there are steps in liquidations process. The step 1 is record the sale of the non-cash assets and distribute the gain or loss on realization to their respective capital accounts based on their profit and loss ratio. For the step 2 is to pay the partnership's outside creditors. Step 3 is if, upon distribution of the loss on realization, one of the partners develop a capital deficiency, he make good with such deficiency by any of the following means. So the letter A is that exercising the right of offset, thereby applying his loan account to his capital deficiency. So if his loan account is not enough to cover his deficiency, he may give additional cash for the balance. In case he is insolvent after the offsetting, the balance of this capital deficiency is absorbed by the remaining partners with the credit balances based on their profit and loss ratio. The letter B is that if he has no loan account, he is going to give cash equal to the amount of his deficiency if he is solvent. If in case he is insolvent, his capital deficiency will be absorbed by the remaining partners with capital credit balances based on profit and loss ratio. The step 4 is that pay the partner's loan account balance if there is any. And the fifth one is that distribute the remaining cash to the partners based on their respective capital account balances and not on PL ratio anymore.
Statement of Partnership Liquidation. Look at this table. Partnership Statement of Financial Position as of 31 October 28. Non-cash assets were realized as follows. Case 1. Gain on realization. After posting this entries in their respective ledgers, all non-cash assets are with zero balances. Look at this table. Entries on credit side of gain or loss realization account represent gain, while on the debit side, lost. Number 2. Distribution of gain to partners based on PL ratio. Step 2. To record payment of liabilities. Step 3. Not applicable since not partners has developed a debit balance. Step 4. To record payment of partner's loan. analysis. Distribution of remaining cash to partners. Look at this table. Case 2. Loss on realization, no capital deficiency. Sale of non-cash assets and distribution of realization loss. Case 3. Loss on realization with capital deficiency and right of offset exercise. Sale of non-cash assets and distribution of realization loss. Payment of liabilities. Those loans account is offset against his capital deficiency. Payment of partner's loan. Cash distribution to partners based on their actual capital balances. Case 4. Loss on realization with capital deficiency, right of offset, deficient partner is not insolvent. Observation. Look at this table.
Case 5. Loss on realization with capital deficiency of one partner absorbed by two other partners. To illustrate this case, let us assume the following changes in the account balances before liquidation. Try to look at the table below. Assume non-cash assets 100,000 pesos were sold for 600,000 pesos or at realization lost of 50,000 pesos. Tiguang Partnership Statement of Partnership Liquidation with 31st October 28. The table shows partnership capital balances. To observe, letter A, the capital credit balances of Go and Wang could not absorb the respective share of the realization loss. Hence, the debit balances of 3,600 and 700 pesos. Letter B, Go's loan account of 3,000 pesos which is offset against his capital deficiency of 3,600 is not sufficient, so that his remain to be debit balances of 600 pesos. Letter C. Wang has no loan to the partnership, therefore no right if offset can be exercised. Letter D. Since Go and Wang are assumed to be insolvent, their capital deficiencies are absorbed by T in the amount of 600 pesos and 700 pesos respectively. So, number 1, sale of non-cash and distribution of realization loss based on PL ratio. Number 2, payment of liabilities. Number 3, Go's loan account is offset. So, we have a journal entries. The cash is 21,000 pesos. The T capital is 11,700 pesos. Go is 11,600, Wang capital is 11,700, non-cash asset is 60,000 pesos. To record sale of non-cash assets and distribution of realization loss. Accounts payable is 20,000 pesos, cash 20,000 pesos. To record payment of liability. Go loan is 3,000 pesos, Go capital is 3,000 pesos. To offset loans against capital deficiency. Number 4 is capital deficiencies of Go and Wang who are insolvent absorbed by T. Number 5, cash distribution to partners based on their actual capital balances. T capital is 1,300, Go capital is 600, Wang capital is 700. To record capital deficiencies of Go and Wang being absorbed by T. So the T capital is 5,000, cash capital is 5,000 to record payment of T. Note, if deficient partners are solvent, they are going to make good with their capital debit balances, contributing cash to partnership to journal entry. So, to record cash distribution of partner to pay of capital deficiencies. So, the cash is 10,000 pesos. The non-cash assets is 110,000 pesos. Accounts payable is 20,000 pesos. Wang loan is 5,000 pesos. And the T capital is 40,000 pesos. In liquidation by installment, the non-cash assets are realized on a piecemeal basis. The basic problem involved is how to equitably distribute cash to partner after payment of its liabilities when there are still unsold non-cash assets and their realization gains and losses could not be determined yet, which also affect the cash payment to partners. Remedial measures. The problem equitable distribution of cash to partners after payment of liabilities can be resolved under these two methods or approaches of cash distribution. So number one is theoretical loss approach. Number two is loss absorption ability approach. Theoretical loss approach is under this approach is a schedule of cash payments. It's prepared every time there is a cash available for distribution. It's considered the following. So letter A, the unsold non-cash assets are treated as a theoretical loss or total loss and is charged against the combined capital and the loan balances of the partner based on the PL ratio. Letter B, a partner who's combined the capital and loan balances could not fully absorb his share of the theoretical loss would develop the capital deficiency and is assumed to be personally insolvent. His capital deficiency will be absorbed by the other partners with the capital credit balances as an additional loss based on the profit and the loss ratio. So letter C, only partners with the capital credit and loan balances combined after absorbing this share of the theoretical loss and additional loss can receive the cash available for distribution equal to the amount of the combined capital, credit, and loan balances that appeared in the schedule of cash payment. The amount is being referred to as a safe payment. Mechanics of the theoretical loss approach. The mechanics of the theoretical loss approach will be the best illustrated in the problem presented in the next page. As June 28. Since there is no much of reference at the table below. Liquidation prepared under the lump sum as against installment of illustration will be centered on the preparations of the schedule of the cash payment. The statement of liquidation under the installment will be also presented for you to see how the schedule of cash payment is being applied. Illustrated problems. Partners Sai and Tan and Co. were shared profit and losses of the ratio of 50%, 20%, and 30% respectively finally decided to liquidate their partnership. The post-closing trial balance before liquidation is presented in the next slide. Stacy Partnership post-closing the trial balance as of June 28. So try to look at the table below. So we have the non-cash assets were realized as follows. So the requirement is, number one is statement of partnership liquidation. The number two is schedule of cash payment to support the distribution of cash at its become available. Stacy Partnership Statement of Partnership Liquidation in 30 September 28. The table shows partnership capital balance. So the step 2 is determine the theoretical loss. Theoretical loss represent the book value of non-cash assets which remain unsold and computed as follows. So the total non-cash assets before realization is 69,000 pesos. The least book value and non-cash assets that were sold during the first installment on July is 10,000 pesos. The theoretical loss is 59,000 pesos. Step 3. Distribute the theoretical loss to partner based on their PL ratio as follow. So try to look at the table below. Combining the step 1 to 3, the partial schedule of cash payment will appear as follow. Try to look at the table below. Observation. A. When the theoretical loss of 59,000 pesos was deducted from the combined capital and loan balances of 65,000, the 6,000 different represent the amount of the cash available for distribution, which is exactly the same amount appearing in the cash column of the statement of liquidation, as marked with asterisk. B. Upon the distribution of theoretical loss, Sai developed a debit balance of 7,000 because her combined capital and loan balances is 22,500 is not sufficient to cover up her share of the theoretical loss of 29,000 pesos. So we have the last step, which is the step 4. The debit balance of Sai will be absorbed by Tan and Co. as an additional loss of shared between them based on their PL ratio computed as follows. So the table shows the distributed. So therefore, of the 7,000 pesos deficiency of Sai, the share of Tan is 2,800 while the share of co is 4,200. The ratio is being established did not include with the SI anymore. So while the original PL ratio is 5 ratio to 2 ratio to 3 or 50%, 20% and 30%, SI 50% was not included, hence what was the left where the 20% or the fraction of 2/5 and 3/5 Tan's capital balance after his share of the theoretical loss of 2,200 could not absorb her share side deficiency of 2,800. So hence the 600 pesos deficiency of Tan will be absorbed by Co.
Schedule 1 STC Partnership Schedule of Cash Payment First Installment July 28. The schedule resolved the problem who among the partners will receive that 6,000 cash available for distribution and its partner co. The statement of partnership liquidation will be continued showing the distribution of 6,000 cash to co and realization of non-cash assets of 40,000 for 11,000 during August, the second installment. During the second installment, non-cash assets of 40,000 were sold for 11,000. The realization loss of 29,000 were distributed to partners based on PL ratio, computed on the next page.
Again, a problem comes in who among the partners will receive the cash available for distribution of 11,000 pesos. Another schedule of cash payment is prepared to equitably distribute the available cash of 11,000 pesos as presented in the above table. The same procedure is followed as already illustrated during the first installment.
The theoretical loss during the second installment is 19,000 during as follows. The 19,000 theoretical loss is distributed to partners as follows. Upon distribution of the theoretical loss, partner C develops a debt balance because her share is the theoretical loss is bigger than her combined capital and loan balance. The cash available for distribution of 11,000 will be given the following partners as per schedule of cash payment marked as Schedule 2. The statement of partnership liquidation will be continued showing the distribution of 11,000 cash available. During the third and final cash distribution, there is no need to prepare schedule of cash payment. Loan, however, is paid ahead than a capital. Final observation. In liquidation by installment, you observe that even a partner has a loan to the partnership, he is not given priority to receive cash. A completed statement of partnership liquidation is presented below. Statement of partnership liquidation by installment. The partner's capital balance. STC Partnership Summary of Cash Payment. Summary of cash payment to partners. The summary of cash payments to partners can be prepared based on the statement of liquidation as supported by the schedule of cash payment above.
Loss apportionability approach. Under this approach, a cash priority program is preferred even better liquidation takes place. Mechanics of loss apportionability approach. Step 1. Determine the partner's capital and loan balances before realization or liquidation. Step 2. Divide the individual partners' combined capitals and loan balances by their respective profits. Loss absorption balances, cash payments. Step 3. Rank the partners based on their computed individual loss absorption ability. Step 4. Multiply the access of one partner over the other by its PL ratio. Cash priority program. Balances before realization, capital, loan, total partners' interest. Interpretation of the program. Before the liquidation process takes place, the program tells us already who among the partners will be given priority over as it's become available for distribution. The program reveals the following. Application of cash priority program as illustrated. Months realized, book value, cash realization, loss on realization. The cash available for distribution is computed as follows: cash balance before liquidation, cash realization in July installments, and total. Schedule of cash distribution based on cash priority programs. Cash distributed as per program. Based on above schedule, cash was distributed as such as Sai receives 3,500, Tan receives 6,400, and Co receives 7,100 for the total 27,000.